This is the Unscripted Climb, the podcast where business owners talk about stuff that doesn't make it to motivational speeches. I'm Chris Beecham, founder of Perch Merch, where we put your logo on things people might actually keep. I co-host this with Natalie Micale, founder of Oh Hello Agency. She makes brands look like they have their act together. If you want a free merch or brand audit, we do that too. No pressure. Just don't blame us if we're honest. Go to theunscriptedclimb.com. Let's get going.
Hi, everyone. Welcome back to the Unscripted Climb. Natalie Micale Schultz here. Chris Beecham here. You know us. Today, we are joined by the lovely Greg Harris. He is the founder and now a board member for Quantum Workplace, an employee engagement platform that, I will say, I'm going to butcher this, Greg, does so much more than employee engagement today. Greg actually was introduced to me by Brendan Evans, a colleague of mine who was looking at the Nebraska Wesleyan Rolodex of alumni at the beginning of my entrepreneurial journey. And he was saying to me, I think you should meet with this person. I think they can provide you a wealth of knowledge and interesting information that will support you on your entrepreneurial journey. And so that's actually how I met Greg, and delighted to have him here today. Would love to start, Greg, with just a high-level intro of where you're at today and what point in entrepreneurship you're in.
I appreciate that, Natalie. It's a privilege to be here. Great to meet you, Chris. And it's fun just to reflect on a 23-year build from idea to startup to banging the head against the wall for 2 or 3 years to figure out product market fit. And then to have done a couple exit transactions and to have built a company based here in Omaha that actually has some value and is making an impact. It's a fun story to tell. So I'm absolutely thrilled to be here to share it. My role right now is very different. After 23 plus years of grinding and building and working and balancing out the joys with the trials, we transitioned to CEO role effective June 1 at Quantum Workplace. So
Wow.
It was about a year-long conversation with the board, and I turned 50 this summer. So there's never, when you have a baby called a company, there's never a perfect time to transition that leadership. There are some people that have a lot of real theory on this, like there's a certain number of years that a leader should lead. And I'm not one of those people. Yet I was probably waiting in my career to a time where you have this aha moment where this is the time. And I don't know that moment ever truly came. This is a better time probably than most. My youngest, I have 4 kids. My youngest is a senior in high school. So I'm starting to feel like the work of parenting is changing and evolving. But I also, having just turned 50 this summer, I think I've got another startup in me. And I know that every year that passes, it probably reduces the likelihood that I chase that. So this was as good a time as any to step into a new role, still fully invested, still an absolute cheerleader, an advisor to Quantum Workplace, and still heavily in love with that company. So want to see them succeed, and excited to see what a new leader, where it can take it.
If you take us back to the beginning, how did you even come up with the idea for
Quantum What Workplace? Is it first? What is Quantum Workplace?
Because in the intro, I said employee engagement platform, but I know you do so many more things than that. That's just kind of,
Yeah. Quantum Workplace is an engagement platform. We sell to human resource departments, and we sell primarily to companies that want to make culture a strategic asset of their strategy. That, they see culture not just as a nice to have. They actually want to listen. They want to embed employee listening into the fabric of how their business operates. They want to make sure that they are measuring and monitoring and inspiring performance at the individual, at the team level, throughout the entire employee journey. And they do that with a series of digital tools, from surveys to pulse surveys to performance reviews to recognition features, which are highlighting the great work that teams and employees are doing. We fit in this category called talent management. Now, when we started the company 24 years ago, that didn't really exist. The idea that we were going to quantify a concept called employee engagement was still a very nascent in the idea. There were consulting firms out there that would do surveys. And this was, I think, 2002, 2003. So simply, this is post.com explosion and then reversion. but it is early in the web journey where simply collecting employee feedback digitally, sending out email surveys, bringing people in and analyzing that was accelerating a process that some companies, big companies, the bigger you got, if you were a Fortune 500 company, somewhere in your HR department in 2000, the year 2000, you probably had somebody with organizational development or somebody with a PhD in organizational psychology whose job it was to think about how decisions were getting made, how people were getting recognized, how listening was happening in teams and how it's being analyzed and essentially scoring those human capital metrics. So, but it was probably only those with tens of thousands of employees that were doing that. And so what the web did and what Quantum did in its very earliest stage was made that, sped up like the web did in a lot of different administrative roles. It sped up the collection and the analysis of that information, and it allowed all companies. So the faster, the cheaper that was. In 2000, 2001, you could have hired a huge consulting firm, think McKinsey or Gallup, to do that. And it probably would have cost $500,000, $1 million for a big company just to figure out what employees were thinking. Yet, if you had 500 employees and you were a tech startup in the Bay Area or you were a manufacturing firm in Minnesota, chances are it just wasn't something that was top of mind enough, or it would have taken too long to make sense. We came along and said, you know what, we can do with technology what consulting firms are doing with $1,000 an hour consultants. We'll give 80% of the value of those types of experience at 20% of the cost. I went around in the early days saying, hey, we're like Ameritrade, TD Ameritrade. We are to investing what TD Ameritrade is, and we're competing against the Merrill Lynch's or the Goldman Sachs of the world. Full service versus doing with technology a tech-enabled service. And this was really before SaaS, measurement of engagement. You asked for the very founding idea. That was where we started getting traction. Really, the founding idea was still a little bit different than that. The founding idea was, hey, I came out of the financial services space, so we were managing assets, making buy or sell decisions on publicly traded stocks. And we would always, one of the things that annoyed me about that industry, as much as I love that industry, I would comment with other analysts or other portfolio managers how we would always use the word management. We would say, hey, we're going to buy Microsoft stock instead of Cisco Systems because we really like the management. But we never had any kind of measure. We never had any kind of framework for what that actually meant. And so the initial idea was, hey, let's start measuring employee retention, employee engagement. And let's start doing so in a way where we can capture that data, make it filterable and sortable, and sell that data to investment managers across the country. Sell it on Wall Street. And we built the measures, we built the software, we accelerated all of that. We never really found a buyer for the information among the investment community. It was an idea that might have been 20 years before its time. And so we pivoted and said, you know what, let's turn this analysis over to the companies that we're collecting the data from. Let's be a software company, and we'll help companies be more strategic about this thing called culture. And
how hard was it to make that pivot, Greg? I mean, I think entrepreneurs today have a tough time admitting when something fails or doesn't work. How hard was it in the early days to just go, yep, scrap that, let's go here?
Oh man, with 22 years separating us from then, I've probably romanticized. It probably looks and feels a lot easier today than it was back then. It was hard. It was hard to give up the original concept because you do get a lot of, when you're an entrepreneur and you have a cool deck and you have a cool story and you're pitching it to potential employees, potential customers, potential investors.
Yep.
You fall in love with the idea, and you never really know how long to chase that idea. How you as entrepreneurs, we value grit and persistence and durability, and you want to just be able to run through obstacles and hurdles, but you can't do that forever and still make payroll. So, it's finding that magical time period to say, hey, we've tried this enough. Where do we, and can you de-risk a big pivot decision like that? Number one, it wasn't a risk for us because we weren't creating revenue with the original concept to begin with. So it was really us asking the question, if we want to survive, what do we have to do? So it was probably 9 to 12 months of recognizing we're getting a lot of feedback, but people aren't, the people that are saying that's a brilliant idea are not the ones writing a check, or they're not writing a check for it. So what do we do? How do we do? It was, I remember it being hard. In for a long time, probably for another 2 years, we still straddled the fence a little bit. We kept these ideas. We kind of kept the product. We still talked about it. We never really killed it, but we just started moving and started developing software and the other, to be a more software play. And that decision probably wasn't hard because that's what people were actually writing checks for.
Yeah. So it was easier once you saw the money come in. You're like, let's go do that because that allows us to buy the car, eat the meal, do the things.
Yeah.
Okay. Fast forward.
And that's where there was comparable. I mean, that was stuff that a lot of companies were investing in or talking about wanting to invest in. So sometimes as entrepreneurs, we kind of have this notion that we want to be the first, we want to be the only, we want to truly have a unique story. But the more unique story that is, the more likely it is that there's a reason somebody isn't already in that category building that space. It just may be an idea ahead of its time.
So how did you really start gaining traction though? Are you the one out there trying to sell? How do you go about selling that back then?
Yeah, it was company to company, telling the story a bunch of times. It was writing. This was early in kind of the inbound marketing type
blog content.
Yeah. So we knew the more surveys that we captured, the more insight that we had, the smarter we were about what truly it was a unique idea for us to say we can standardize the measurement of employee engagement. Because even, I mentioned the consulting firms doing it before us, when they were doing it, they were really reinventing the measure that the survey every company that they went into. So that was another level of innovation for us to say, you know what, if you're an employee at a accounting firm, if you're an employee at a manufacturing firm, if you're an employee at a retail store, the things that attract you to the company culture, the things that truly engage you and to keep you there and to keep you dialed in from a discretionary effort perspective those are human things. They're probably pretty universal. They're, whether you're a CPA or a manufacturing person, doesn't really change how you are magnetized to your team or to your workplace. So that was its own level of innovation.
I feel like, and tell me if I'm wrong, but back then, a lot of the owners of these companies you're going after really didn't care about you didn't really start caring about your employees.
I mean, now we've almost
it's a whole different culture now. That but you were like, I mean, to me, you're groundbreaking just in that, trying to go up to these people and say, listen, I know you don't care about your employees or your culture and all you care about is money, but listen.
That's kind of harsh, but I also think social media and cancel culture and grassroots transparency, which means anyone can go on and write a review on Glassdoor or start a Reddit thread or post on Instagram and share what's actually happening. I think employees today are emboldened to share their truth, and companies are being called to action to build a culture.
I think that's an astute observation, Chris. And in the demographics of our society in the late 90s and the early 2000s actually forced this issue. There's a term in the consulting world that we call the war for talent. And it was really the idea that as the economy was growing, more jobs were being created than we had humans to fill these jobs. That's what the war for. So all of a sudden, organizations had to change how they were operating. HR departments had to start thinking more like marketers to attract and to retain people because they had more job openings. The pendulum of employee to employer power had shifted meaningfully just because they needed bodies, and that was a trend that really probably in earnest, happened until 2020, and it probably got exacerbated. The pandemic probably put it at risk for about a year, and then it accelerated that demand for talent as companies were hoarding employees. But you're exactly right that in those early years of the 2000s, there were certain industries that got it quicker than others. Professional services, technology, companies who needed innovation, who needed creativity, that were on the forefront of knowledge work. These are people whose most important asset started at 8 and finished at 5. If you were a bank or you were a manufacturing firm, you were probably a little bit slower on this curve to figure out how critical and how important and how strategic talent was. But fast forward to the 2010s, 2020s, all of a sudden, most companies get it now. I was in a a sales pitch. This goes back 15 years. It was with it was a publicly traded call center firm. And it's the dream sales pitch. It's the kind where I have to look big. We're still a pretty small company at the time, but I bring the three closest employees that could be there. I think one of them might have been like on their first day and, didn't even have cards printed yet. But I had the C-suite of this publicly traded company. I had their attention for an hour. And so we were going to roll out the carpet for them. And I realized 15 minutes in when I made a comment, this was because they were in the call center space, because I knew that the industry average for employee turnover was 110% in that industry.
Yeah, it's high.
I made a reference to that. And actually, as I was talking about return on investment, I was pinning it to that turnover value. Like if we can get 110% down to 90%, we don't have to cut it in half. We just needed to get it to 90%. And here's the dollar value that is worth. And the CEO stopped me and said, well, wait a minute. Why would we want to get the employee turnover number below 110? And I thought he was like punking me at first. I thought he was like testing my own math. And so I kind of played along. And then I repeated the concept of return on investment. And then he explained to me like, no, we don't want that. It is actually cheaper for us. If we have all of our people renewing their employment at our company, if we have to pay cost of living wage increases for everybody, our financial model won't work anymore.
What?
So the money that we spend on job ads and training of new talent, that is much less than it would be. And I sat stunned. And this was the only sales pitch probably in 23 years that I was involved in where I just fold up my laptop and I'm like, I have nothing to offer this room, and took my ball.
So wait.
Went home.
Why did they want the meeting to begin with? If they don't want people to stay that long?
That is a very good question, and one that I still today don't have an answer to.
It is.
I'm sure somebody in that room got it and understood it.
Somebody wanted to maybe show that they wanted to. That could be part of it also, Chris. The HR brought us in, thought that we could, they had been trying to make this pitch for a while, brought us in to help it. And with the CEO, it just wasn't going anywhere. Or they just wanted to create a facade to look of culture. Hey, we're, for 20 years, we've been involved in city by city best places to work lists. So maybe they wanted to kind of feel out what it would take to make one of those lists. Maybe they thought that it would serve them from an employer branding perspective. But yeah, to this day, I don't know exactly why they had us in. And but it was proof to that earlier observation you had, Chris, where in the earlier days, not everybody got it. Employee engagement wasn't an obvious. We did a lot of educating, a lot of missional teaching in the first 5 years.
To know just from your perspective, like,
hey, listeners, quick break. Listen, we started this podcast because we actually like talking to other business owners. Whether you're crushing it or just Googled how to fire someone without crying, we've probably been there. If you ever want to connect for merch, branding help, or just swap war stories, check out perch-merch.com or ohhelloagency.com. No pressure. We'll even do a free brand or merch audit if that's your thing. All right, back to the episode.
Any other war room moments where you had to pick yourself back up after being told something that you were like, I can't even believe you just said that? Because I do think you're getting to see in this role over the last 20 years, I imagine you've been able to see what leaders are truly thinking about their people and how they see human capital.
Yeah, we have a lot of anecdotes in that bucket. There was a time I was talking, it was a group, I even remember where it was. I was in Columbus, Ohio, and I was talking to a room full of HR leaders. And I was sharing some research with all the data we capture, which we have more information than most any other company can have about what makes employees tick and what makes teams perform well. And so I was really just dumping a bunch of data on a room full, it's probably 500, 600 HR leaders. But it was all describing the link between employee engagement and other business, revenue growth, profitability, so it was a message even that should have been received well for CEOs. Somebody comes up to me afterwards and says, hey, I understand kind of the discretionary effort and the advocacy and some of the engagement metrics that you were talking about, but we've changed the type of coffee that we serve to our such and such firm twice in the last year. And we've added like 10 new types of tea in the break room. And our survey scores are the exact same.
Are you serious?
That's great.
And I just, and again, I'm like looking around, saying, is there a camera on me? Is this a game show? Like, you weren't listening to that 45-minute talk, were you? You had some of those bullets. You wrote something down, but you didn't get it. It is not the comfort attributes. It's not what we put in a break room that creates employee behavior. So that there are lots of fun things like that where some people give work everything that they have, and it becomes their life. And other people say, work is something very different. I start at 8 on Monday and I finish on Friday at 5, and I work for the weekend, and they have a mindset. And that mindset probably is a group that was never really designed to think about culture as a strategic lever or a strategic asset. And there are still some of those people today, by the way.
It's not us, that's for sure.
Yeah. No, but I'm sure you have a ton of spectacular stories. So tell us how the growth went over the last 23 years then. Like, what's it look like now, I guess, at the end of your CEO tenure?
Give us a State of the Union.
Yeah. Annual recurring revenue is the highest it's ever been. Growth rate is still steady. It's profitable. That was one decision that we made early on in a time when we were competing against a growing group of software first companies that didn't think profits mattered that much. In 2021, we were doing an equity transaction. We were pitching a bunch of investors, and whatever our EBITDA percent was at the time, it was probably mid to high teens. And so that was in a deck that I was talking to, and one investor was like, "What? Why are you making so much money? Do you not have any ideas on how to invest that cash anymore?" And that question didn't make sense to me. But there was a time, there are waves in the investor moods where they say, you should grow at any cost. And, a year or two later, I should have gone back to that person and said, hey, do you still have the mindset that 17% EBITDA margin is a bad thing? So the business is as healthy and strong as it's ever been. It's as big as it's ever been. It still operates out of Omaha, Nebraska, although I think only 60% of our total headcount. We have, I think, between 140, 145 people, full-time, all domestic talent. And I think 60% of those are in Omaha, 40% of those are remote. But that's the state of the company. We built, it took us 23 years. So to the original question, Chris, we knew we were building for durability. There were moments there were inflection points where we knew we were going from being able to sell to small companies to middle-sized companies, or middle-sized companies to big companies. And those felt like real inflection points. There were moments when our brand started getting bigger and we start getting inbound interest on people that wanted to buy from us, which felt like an inflection point. But there was never a time where we took a different path we bootstrapped longer than most software companies did. And I look back now and I say, we averaged over the course of 23 years, I think a 23 or 24% compound annual growth rate, which isn't bad. It's in the world today where you have a half dozen AI companies that went from 0 to $1 billion in revenue. It feels like overnight. It doesn't feel like it's the biggest win ever, but it was durable. It lasted a long time. It still lasts today. We've built careers. We have people in their mid 30s now that started with us and, interned with us in college and now have VP titles and have been, have 10 to 15 years. There's so much for millennials wanting to have 5 jobs before their 30th birthday. So and we've done we exited to private equity in 2021 and at a valuation that I'm proud of, and it shows that rewarded shareholders for 23 years, I guess at that time 20 years of durable growth.
Was there any point in this growth journey where you wanted to quit? And how did you overcome those moments?
I don't think there was. There probably
really?
should have been.
Are you being honest?
He had steady growth every single year. I wouldn't want to quit either. He never went backwards, really. He stumbled, but you didn't fall.
There's truly no moments where you were like, I don't really want to keep doing this. Maybe moments where it became harder to stay on track because you got bored.
Yeah, it sounds implausible, but we had hard moments. We definitely had hard moments. But in my brain, that never translated to a desire to quit. And that may be a problem in and of itself. Our growth, although I say 24% CAGR over those years, that's the average, which means that, for the first 5 years, we were pretty flat. It took us 5 years. I think it took us 6 years to get to 1 million. And then all of a sudden it took us 3 years or 4 years past that to get to 10. Growth happened at those inflection points. And there were, even in the weirdest years, something good. There, you could look at our numbers, you could look at the growth, you could look at the feedback that we're getting from our customers, and there was something there to get us excited about. In 2008, 2009, when it seemed like the world was coming to an end, the banking crisis was happening, it felt different. Like, you had CNBC on, and every day the market was going down 500 points. It felt like, your stomach was just churning. But at the same time, we had companies coming to us saying, hey, the $1 million a year that we spend with such and such consulting firm, my budget for that just got cut. In fact, it got cut in half. We need to continue doing this work, but we have less budget. Can you guys help us? And we're looking at that opportunity saying, well, we don't have any $500,000. Of course we can help you. So there was always something in the worst and the scariest moments that gave some glimpse of, and probably, probably that's naivete on the part of the founder, and I would say 2020 was similar. Also, one of the hardest, weirdest moments for any business leader to have to navigate through. Salespeople are asking questions like, is it even ethical to be cold calling other companies when they're racing around trying to figure out how to move their employees home and how to do so safely, and how to try to figure out how to do random testing to, can we let people into an office? Can we reorganize an office for everyone to be 6 feet apart from each other? It was just a weird time. But even through that, the glimpse, that green shoot of opportunity that we were seeing was, hey, the more remote a workplace is, the more they're going to need digital tools to figure out. Even smaller companies, maybe you have 50 employees, and you've avoided ever having software to do what it is we do, because you can kind of look around the office and get a feel for how people are operating, how effective or productive, or how much joy they have in their work.
I would think your product then was more important than ever, because everyone's working remote, and how do you even know how people are feeling?
Yeah. That was just it. So through all of those massive moments of change and what felt like painful drudgery of economic circumstances, there was always some element of excitement, of hope, to say, this is gonna be good for our business, not bad. We just have to weather the storm better than everybody else.
Yeah, that was kind of the plan for a lot of us. Yeah.
Yeah. We got through it.
Yeah. Okay, so at the beginning of this episode, you maybe kind of clued us in that you may be starting another startup.
Yeah, what's the startup?
Let's say that was real.
Yeah.
Let's say what would be something that you would want to venture into, or you see a need for?
Yeah, I don't have any news to break now. I have probably 4 or 5 different concepts, and when I say different, I mean I've got 2 or 3 software oriented. The world of software is going through. This won't be news to anybody listening to this. Is going through a revolution similar to how it did in the starting point of quantum, the 2002, 2003, where AI is bringing on a whole new level of capability. That's
because
exciting.
A lot of people can build software now that could never build
Yeah.
software before.
Yep, that's right.
Yeah,
That's right.
It's wild.
So a couple ideas there, but there are a couple ideas that I'm working on that are product oriented. This is probably the weirdest time to go from having built a software, digital company for a long time, to building a product where I actually have cost of goods sold and inventory. There are a couple ideas. I'm usually one that says if you have 5 ideas, you really have none. And so that's probably a fair assessment of what I'm working on right now. There are ideas that I have. None of them are worth talking about yet. I need to talk myself out of at least 3 of them before I can get excited about the other 2. At the same time, for the first time in my career, I'm allowing myself to not, I don't have a lot of pressure on myself or a timeline that says I have to launch, I have to go to market on this day. I'm taking a break. I felt like a college student this summer. Like I felt like I had a college break, and did a lot of travel, hung out with my kids. My wife and I spent some time in Argentina. We just had a beautiful time without a lot of pressure to to get the new idea launched.
That's
too
awesome.
quickly.
Yeah. Good for you. I think that's kind of everybody's dream,
I'm doing the
Yeah.
same. I leave for Portugal in like a week. So
There you go.
I'm doing a little reset.
All right.
you
Well,
know?
I'm here, still
too in
having that
America.
dream.
I'm curious what you think AI will do to our workforce. As someone who has talked to, hundreds and hundreds and hundreds of HR leaders over the last 23 years, 20 plus years, what do you think AI is going to do to the future of and to
Yeah.
people?
I think it's one of the most important questions to ask right now. I'm a AI optimist. At the end of the day, I think I'm excited about what it's going to do for talent. I think it's a superpower for all of us. It is, I don't think it's going to shell organizations. I think there are going to be startups that can do with 10 people what it would have taken 150 people to do 10 years ago. I don't think it's going to take GE or a big Fortune 500 company and go from 100,000 employees to 5,000 employees. It is going to create new opportunities. It's going to create you're going to be able to chase more ideas. I think it's going to have an impact. This is going to get a little too crazy. I think it's going to give us a whole new appreciation for the arts. I think that there's going to come a time in the single number of years, like 3 to 5 years, where as parents, we don't try to talk our kids out of majoring in art when they go to college. It's
Or
because welding, welders, and that's
Blue
probably
collar.
already happened. Welders, plumbers, some of those trades are making more. It's actually why, if you scan the number of new enrollments into colleges across the US right now is down. And it's been down year over year for a couple years. And I think that's probably a good thing. There are so many careers, so many lucrative careers out there where a person doesn't need a 4-year degree to have a fabulous career. And we're smarter about that culturally today than we were, I think, when my generation was stepping into college. But I think there's going to come a time where a nurse probably makes more than a general doctor. I think there's going to come a time where an artist makes more than a
marketing person.
marketing person or than a data, anything with analyst in the title is a great knowledge set to have, but it's the title that is going to be more relied upon by machines.
I think AI is going to take a lot of
optimistic.
jobs. I'm not as optimistic as you, Greg. I think we're going to be looking at universal income in 10 years. I think that there's going to be a massive shift. I know it's
I know. I'm with Greg.
different opinion.
The more authentic things are going to rise.
I agree with that. The more authentic things will rise, but what will also ultimately happen, right, is the people who are, let's say, doing things like DoorDash and Uber. I just went to Austin, and DoorDash, you got the little mini robots that are driving around with the food. Uber, there's self-driving cars. So we're already seeing that, those jobs that are typically supporting those who are at a disadvantage financially are going, and AI is getting more and more advanced. I think that there's going to be essentially a scenario where, unless you are a very strong creative thinker who can solve problems and create outcomes, you're going to find yourself without a job. And the way that I think about that, Greg, you'll appreciate this, is I'm very careful not to use AI to make me less intelligent. I constantly ask it to interview me about a problem I'm trying to solve and ask me questions and serve as a thought partner. And I think a lot of kids today, and entrepreneurs even, I don't know why you're having AI rewrite all of your emails, because if you don't know how to write an email and actually communicate a thought, that is going to be a problem. And we're taking shortcuts when we should be taking longer term strategies to keep our intelligence. That is my AI
I
perspective.
guess we'll wait 10 years and go back to this episode. We'll just have to mark it.
I think I'm telling you, the universal income in 10 years, it's going to be an option, and it's going to be a forced hand with how many jobs are taken by AI.
Okay.
There's one advantage to being the oldest part on this call. It's the thinking about the job disruption isn't that different than other massive technological innovations in the last 200 years. So, like, to your thought, there is a speed of disruption that actually probably presents more risk today than the internet did in 2000, or that data processing did, 50 years ago, or that robotics started doing 10 years ago. But we only know, especially in the US, where we know innovation, it's kind of what makes this place so darn terrific. There will be more opportunities created than there will be scary things that happen. There will be jobs that we had never heard of, that we couldn't even conceived 5 years ago. There will be,
Have you seen Idiocracy, the movie Idiocracy?
Yeah, yeah, yeah. There are some, there's something I tell my kids, like in a world where I spent 23 years in the organizational psychology business, the business of HR and technology and the convergence of those things. If your job is just being a manager, like there are certain functions that I think that most companies will have fewer of. If you're a customer service rep, AI will do your job better than a human will do. 10 years ago when you were calling into the airline, you actually kept hitting zero because you hated talking to the phone machine. We're either there now or we're really close to a place where that AI bot that you're getting support from at the airport, at the airline is better than a human. It got trained faster. It will be more reliable over time. If you're a manager and you're in a company that has generally 5 employees for every 1 manager, we're probably a few years away from 10 employees for every 1 manager. Because the job of the manager is really
Human.
pattern recognition, analysis, coaching. So you're gonna be a coach. You're gonna feel like a position coach on the sideline of a whatever your favorite sport is, where you're truly just a coach. But you can do that for more people than you probably can today or yesterday. So there will be a lot of change, and I think the economy will be bigger. The UBI term that you use is a little scary for me, but there is a reason why the idea was founded out of Silicon Valley and probably promoted most by those that have made the most in tech.
So what kind of advice would you have for somebody who's at the beginning of their journey of entrepreneurship and they're trying to get where you are now?
I think the most universal skill, the hardest skill to keep and to maintain, even over a successful career, is curiosity. And so when somebody says, hey, can I get an hour of your time? Can we have coffee together? I'm thinking about building this, or thinking about doing that. As I'm just, sitting back, listening, I'm trying to gauge and trying to monitor whether the person I'm sitting with really has that intense curiosity that I think will be sustained over long periods of time. So it's not an amount of knowledge that somebody has at any given moment. It's, do they have an absolute unquenchable appetite for new ideas and new information? That's the most common, the most predictable competency, I think, for success. And what separates successful entrepreneurs from the rest. But I'll be the first to admit that can be hard to decipher in a 45-minute conversation. What other advice would I give to
What would you give
a
to
person?
yourself back at the beginning of the journey? I mean, what would you tell if you could time travel and you could go tell young Greg some things?
Yeah.
What would that be?
I think about that. I mean, I've had time, this is the time in my career where I probably think about that more than I was when I was more actively in the operations of the business. I had in the most impactful growth inflection points of our company, I probably had a very, what I will call a Midwest view of capital or capital raising. I see a lot of entrepreneurs make 2 mistakes when it comes to how much capital they need to create their business. They either assume that they absolutely need capital. Like, we went through a weird time, especially in tech, where you almost celebrated your ability to raise capital more than you celebrated the skill that you had at delivering value to a customer or to sell a new customer. Like, people will write more press releases about raising new investment dollars than they will selling new deals. So there's that mindset, there's that mistake. And then the other mistake is probably that you eschew outside capital to keep control as absolute long as possible. And I probably made that mistake. If I were to whisper to my 24-year-old self, it might be, don't white knuckle control so tightly that a pile of cash that presents itself down the road couldn't grow more speedily. There's one competitor. The psychology of the entrepreneur, is as relentless as you have to be on obstacles and as focused as you have to be on the horizon. There is a lot of comparison that happens. It's easier for me, looking back 23 years, to focus on the one company. There's one company that started when we did, had a very similar product set. They raised some outside capital about 6 years into our history. Up until that point, we were lockstep, head to head with them. Our companies looked a lot alike. They were successful with what they did with that capital. They 5 or 6 years ago, crossed the $5 to $6 billion. And it's easy, the comparison game in the entrepreneurs to look at that and say, if we would have only, and it's hard then. What I fail to do sometimes is to think for every one of those companies, there are a few dozen shells that are laying in the graveyard of startups that they were companies, they were on our competitive slide deck 10 years ago or 15 years ago, and they're gone. They just disappeared. So that would probably be the other piece of advice I would give the younger self is tamp down, focus on your customers, focus on who your radical customer can be and should be, and not who your radical competitor is or should be, because it's easy to get distracted by the successful ones and the unsuccessful ones when we're looking at competition.
I think that's really good advice.
Yeah.
I think oftentimes entrepreneurs with social media see the highlights. We talked about that at the beginning, and they don't really understand that building something with over 110 employees, that people have been able to sustain lives and build their families on that income, and you've been able to change the workplace culture of hundreds and hundreds of
Yeah.
places. That's still really rewarding too, right? And I think we get lost and we forget to have gratitude for just what we actually have accomplished. And I think in the journey too, celebrating the little wins. I know for me as an entrepreneur, when I got that first big website, the tourist website, I'll never forget, that was like our first $40,000 to $50,000 website. I remember how stoked I was. And then, you get that again, 6 months later, whatever. And you kind of lose perspective on how you win.
Yeah.
So
I had a fun experience. I love that anecdote, Natalie. I had a fun experience. This was about a year ago, and we were sitting. It was coming out of it was the end of this customer conference that we had. So we probably had a few dozen our customers at an event, but it was some of the old timers that had been with Quantum the longest, all of a sudden sticking around after a strategy meeting, probably having a beverage in there. There were 4 in this circle, 5 including me, and that's when it hit me that I'm looking at these 4 other leaders, all had C, the chief word as part of their title. All were with the same company as they were when they came, started using Quantum Workplace as a vendor years before. And all were like 3 or 4 layers. And these were people that were at big brand, big companies, and all were 3 or 4 levels of growth in their career. And that was one of the most affirming moments of career satisfaction that I had in that 23 years, because I said, hey, this is real. When you stay focused on strategy, when you execute strategy well, when you build product that adds value, these are the kind of careers that you create. And yet that's a success that never shows up on our income statement. It's not, ARR is fun too, but it was a level of affirmation of durable growth that has a hard time, it doesn't necessarily show up in a board deck.
It's amazing. So as we wrap up our time together, I would love to know, you've hinted at what's next, but you haven't really delineated what you're doing with your time besides some travel. What does the next year look like for Greg Harris?
I'm asking myself that question every single morning. When I can look back, I've done some fun things. I've said yes to some things in the last 3 or 4 months that I would have never said yes to.
Are you doing ballroom dancing?
I took tap dance lessons. That's close.
Did you really?
I absolutely did. I
just started tap dancing lessons, right?
I wanted to ask you about that. I thought I saw something, and I knew we were going to, I needed to poke and prod about that. But I've had competitive dancers as kids for a long time, since my 26-year-old daughter was small, and my 18-year-old daughter right now is a phenomenal dancer on a couple phenomenal teams. And I have always been that super enthusiastic dance dad, the one that has like a score sheet at competitions and I'm keeping score as if though I'm a judge. Maybe that's actually my next career.
Yeah, there you go.
Yeah, well, you can edit that out, right? So there was a tradition at a national competition that my daughter's team had to do where the parents were going to learn a dance. And there was this idea that got floated around that I was going to do this tap dance solo. And I think they were surprised that I loved the idea. But the one thing I said is I would love to do that. But if I do it, I'm not doing it as a parody. I'm not doing it as a joke. I actually am going to learn how to do it, and we're going to choreograph it, and there's going to be a real piece that I do. So June and July, I took some lessons, delivered that piece to the parents of the nationals. And it was the most fun. Just just to step back as a 50-year-old and to learn a skill that you've had a respect for a long time, but know that you probably don't have the a natural talent that's going to make you predisposed to be successful in this. It was the most fun I've had this summer. That was my tap dancing experience.
My dance teacher just showed me a study. Well, she regurgitated a study to me that says, she said there was a study, there's a senior living center, two groups of people who were retired. One group was hiking and swimming and exercising, and the other group was doing dance. And the other group had higher longevity rates and higher rates of memory because dance makes
Interesting.
you learn things in a pattern that keeps specific brain cells alive and thriving. So it might just be the best thing you can do for your health.
I love that. I love that. And I got to see your shuffle step one of these days.
I just learned the Shirley Temple again yesterday, and I love that move. So it sounds like you're in the next year playing it in a creative spirit and figuring out your way and your journey.
Yeah. Yeah.
That's awesome.
I've just widened the aperture of the data that even the trip that I took to Argentina, I'm scanning that economy saying, what's the world need? What doesn't it have right now? So I'm a data person. I'm an analytical person at my core. And so to open up the opportunity set and to look across the world and across, outside of software, outside of HR software has been really energizing in the last couple of months.
Well, thank you for coming on, Greg. Curious Greg is what's in my head right now because he
Yeah.
mentioned curiosity as being the defining differentiator for entrepreneurs. We appreciate your time.
Great
Yeah,
to
that
talk
was
to you,
great.
Chris. Great to talk to you, Natalie. Absolutely.
Thank you very much, everybody.